Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time. Friday, welcome to another episode of the Tech Behind FinTech. I am your host, Nnamdi Osuagwu. Happy to be here as always. Today, we are going to cover FinTech forecast, the top trends for 2023. Should be an exciting show as always. Let's get some housekeeping stuff out of the way and we will proceed. Okay, my camera on, a little stuffy today, so forgive me if I go off camera for a second here and there throughout the show. So this is actually going to be the last episode of the year, taking off next week. It's been a really, really exciting year. Thank you everyone for sticking with us and just, your viewership and so forth. I think we covered so many interesting topics. So without further ado, how we always get started. Oh, I have to do the housekeeping thing, get some things ready right now. Give me a second. What's up, Chooks? We are all right, so let's get some things organized. We're streaming live from Facebook, LinkedIn, YouTube, Twitch, and also Instagram on a separate device. For my people on Instagram, if you want to see the slides that we put together and so forth, the website is pinned, techbehindfintech.com. We have the stream going from YouTube there, so you can check it out. Okay, without further ado, let's start the show. Let's go back. All right, so high level, what's going to be covering? What are we covering in today's show? We're going to go over some big tech layoffs. We've been doing that lately. Every week there seems to be more technology companies laying people off. We're just listing them. We're going to go over Wells Fargo. They were fined $3.7 billion. Binance is acquiring Voyager, which is huge for Voyager users who had their money locked up. And then we're going to go into the main topic of today's show, which is FinTech forecast, the top trends for 2023. All right, so bear with me, guys. It's a little stuffy today, so might have to go offline here and there and blow my nose. So if I do that, apologize for the delay, but we will jump right in. Okay, so what's going on here? Some layoffs. TuSimple. What is that? That's a self-driving truck company developing technology that allows them to drive from depot to depot without human intervention, laying off about 350 people. Autograph is an NFT platform that brings together the iconic brands in the sports and culture to create unique digital collections. I'm just talking about the U.S. companies. There are a few global companies out here. Well, jump too far. Yeah, so Autograph. How many people did they say? They didn't say. It's a crypto company. They didn't say how much percentage of staff. Modern Treasury, 18%. Their finance. They offer it's a payments operation platform used to simplify and modernize business payments. And SonderMind is the last one. 15% provides accessible, personalized mental health care that produces high quality outcomes for individuals. Right. So now let's move on from that. All right. Next story. Wells Fargo, they're fined $3.7 billion for loan, mortgage, and deposit mismanagement. It's not the first time they've been in the news for such things, but the U.S. Consumer Financial Protection Bureau has fined them money. So let's go over the breakdown. Wells Fargo, they'll pay $2 billion in redress to over 16 million affected customer accounts and pay $1.7 billion fine, which will be used to provide relief to victims of consumer financial law violations. It's pretty hefty. We're not talking about millions, talking about billions. The CFPB director, Rohit Chopra, says the refund worth billions of dollars is an important initial step for accountability and long-term reform of this repeat offender. Wells Fargo's rinse repeat cycle of violating the law has harmed millions of American families, Chopra adds. Real interesting stuff. All right, let's hop into another news topic. So this is interesting. You know, Binance was in the news previously for they were gonna buy supposedly GTX, and they backed out after they saw the behind the scenes stuff going on. But now it looks like they're moving forward to it's not settled yet, but it looks like an all indication that they're trying to acquire Voyager. As we know, early this year, I think it was after the Luna collapse and so forth, Voyager, along with DeFi companies like Celsius, was a series of steps, right? They first limit your access to withdraw, and they file bankruptcy. So the Binance deals are worth approximately 1.022 billion. The Voyager Digital's filed bankruptcy protection early this year, says that after review of strategic options, the Binance US bid sets a clear path moving forward. Binance, the US CEO and President Brian Schroeder said, "We hope our selection brings to an end a painful bankruptcy process, which saw customers unfairly dragged into it and no fault of their own." So it's really important to note for users of Voyager, upon closing the deal, users will be able to seamlessly access their digital accounts on the Binance US platform, where they will continue to receive future disbursements from the Voyager estate. Waving some money on IG. All right. So it looks like the Voyager will seek bankruptcy court approval to enter into the asset purchase on January 5th, 2023. So we'll see some more stuff as this develops, but this is huge, especially for the users who have their accounts locked up. Give me a second. Just gonna before we kick off, just give me one. Okay, cool, we're back. Like I said, a little stuffy today, so I might have to take intermittent breaks to unclog. All right. So what are we talking about right now? Main news, main topic of the day: FinTech forecasts trends for 2023. Look, 2023, AI, right? Everybody's talking about it. I mean, you know, there's many different trends, so that's nothing new, in my opinion, right? Like, no, this when we do these shows, you know, obviously we research topics, hear what the industry is saying. Everybody knows AI, machine learning. That's definitely that's been the talk of the town. Different use cases, different projects coming out this year. Various fintechs leveraging it. We're going to definitely see more of that. But it's a great article I came across, and I'm going to kind of go over some points right now. But let's before we get into that, the financial industries are beginning to tap into the power of artificial intelligence and machine learning to automate processes, improve decision making, and reduce costs. These technologies are being used to automate and streamline financial processes. Let's get a percentage. The Deloitte survey of IT line of business executives, 86% of financial services AI adopters say that adopting this technology will be critical to their business success in the next 2 years. Yeah, 100% agree. But let's go a little bit deeper, right? So this really good article on I think it was Forbes, actually. So a couple of things, right? So yes, AI, people talking about it, but real time. So a couple of points for 2023 and beyond. Real time use cases drive changes in the ML tech stack. So, you know, right now, how a lot of companies are been using AI, it has to be based off of some data. So there's some type of data warehouse, tons of data in this warehouse, and then the models are leveraging that data. But what they're saying that 2/3 of practitioners expect, I think it was Verta Insights, expect real-time use cases to increase significantly over the next 3 years. Organizations that have been living in a data warehousing world and supporting analytical batch workloads need to reevaluate their tech stack with an eye to transactional processing for real-time use cases. They will also need to lean into responsible AI to ensure they don't cross the line from useful hyper-personalization into creepy as they interact with their customers. Yeah, I'm going to post the link to this article because I really got some good insights from it. Hey, what's up, Riley? Another user just joined on Instagram. Don't want to go too far. Increasing AI regulation puts a spotlight on jump in here, guys. So the next, increasing AI regulation puts a spotlight on tools supporting ethical AI. So there's been a couple of stuff going on, right? The EU AI Act, the American Data Privacy and Protection Act, and the Securing Open Source Software Act. The number of proposed regulations around AI is rising rapidly. So that's another thing we're gonna start seeing, signaling the days of companies. So right now it's a lot of self-policing, but once it becomes, you're going to start seeing more regulation over the next few years. Gartner predicts that by 2025, regulations will force companies to focus on AI ethics, transparency, and privacy. And this, I'm going to post a link to the article after I finish going through this stuff, right? Companies must ensure that they have enterprise model management tools in place to meet new regulatory requirements like algorithm design evaluations and algorithm impact assessments. This means that they're able to track and report on how models were created, trained, tested, deployed, monitored, and managed. So once we start talking about that, we're going to get into this topic called ML ops. And that's a whole, and we're going to, when they start talking about model management becomes a center of gravity for machine learning. And I think we're going to start seeing more ML ops. So ML ops is basically DevOps for machine learning. It's just ways to just automate the ML pipeline and putting tools so you can understand the whole life cycle, as what was just mentioned, right? Like how do you track it? The recommendation here: take a holistic approach to machine learning and consider how you are managing models across the model life cycle. Does your ML tooling have a center of gravity that lets you manage models end to end? Identify and fill gaps in your tools for experimentation, production, ML data, and orchestration. So pretty interesting stuff, and I think that's another thing we're going to start seeing. I mean, I heard, I was listening to this one podcast and talking about, especially after, the big thing about ChatGPT came out, talking about, in the future, models as a service. So that's totally interesting. I don't think that's 2023 per se, but I definitely think organizing the model, looking at the entire ML pipeline like you will a software development stack, I think that's definitely something that you're going to start seeing more of and hearing more stuff about ML ops. All right, so what is some next stuff? Companies build ML, we'll jump in here, guys. Companies build ML platform teams to ensure business critical models run smoothly. So, right now what we see across the board is a lot of silos. Maybe one team's working on this model, another team is working on that. They're going to start building the ML platform team with just, they say recommendation. You don't need to hire dozens of platform engineers to get started. Start building your ML platform team with just 1 or 2 engineers. DevOps engineers looking to level up their skills could be good candidates. So you're going to start looking at the support staff. How are we deploying it? Once again, back to ML ops, that whole team perspective. Another thing they see, we're going to spend some time here because I think this is important. Industrialization of ML drive standardization of ML processes. What does that even mean, right? So back to the silo data science group spread across disparate business units. Start identifying a group to lead and standardize ML standardization across the company. So, I'm trying to think of it was some times when we started to think about digital transformation among companies, started to think about DevOps and so forth. Hold on, we have a comment. We got to prioritize our user interaction at all times. So let's Look at what the comment says. My man, Jeffrey Martin. Jeff, thanks for your viewership, by the way, man. Real supportive of the show. I really appreciate that. All right, but here's your question or comment. ChatGTP has been very interesting. The code it translates and assistance from a security perspective is helpful, but can be scary. We're going to talk about that. After this industrialization part, ChatGTP is, that's a good point, is what they call generative AI. And what that refers to is that it's capable of generating new content or output based on a set of input or data parameters. Chat GTP is text-based, but it can include text, images, music, or other types of media in the future. It's when you say scary, they would say the same thing. Humans who understand this technology need to take the lead in ensuring that ethics are baked into generative AI use cases. Also, companies that rely on digital input from their customers should consider how generative AI opens up new avenues for fraud, like fake images of damage, like they're talking about, like in an automobile case, right? If you're going to now start relying on it, there's ways that someone can put fake images and so forth for insurance claims and so forth. So, yeah, it's definitely very useful, but the potential is it's scary as well. But at the end of the day, right, it's really leveraging a data set. In this case, it's a massive data set. But the pinpoint search is just amazing. If you want to learn more about Chat GPT, we did a show on it a few weeks ago. So if you look at our show catalog, you'll find that topic, especially going to the website. Let me find this. Thanks for the comment. Definitely agree. All right, so let's move on to some additional trends here. I think we talked about ML ops. I mean, I think that's going to be huge in 2023, right? How is your pipeline managed and so forth? When you start talking about AI, I think we're not thinking about that. We always learn about that more in the software development life cycle. We're going to start seeing that now more in the machine learning. And when you start even thinking about that, at the end of the day, you're going to use code in libraries. So now I start thinking about supply chain attacks. A lot of stuff in that world it has a lot of Python libraries. Are they secure and so forth? So it opens up various questions, but we're going to start seeing more of those. Next trend, let's move on, is RegTech. So what is Reg? So it's a financial, there's a lot of regulations in FinTech and finance. So how can we better automate that, right? It's basically the use of technology to help financial institutions comply with these regulations is expected to increase. RegTech has emerged to help businesses streamline nearly every part of the compliance process. With the help of cloud technology, machine learning, and big data analytics, RegTech will intensify solutions to enable financial institutions to identify and prevent risk efficiently and accurately. So listen, why is that even important, right? There's a research group that expects a 200% growth between 2022 and 2026 in RegTech. Look, you see the fines, man. Some of these fines for regulatory infractions from financial companies are in millions. Some even hit the billions. So, how do you stay on track for that? How can we put systems in place? And that's what RegTech is all about. Let's hit some numbers here for some stuff I researched. The global RegTech market size was valued at 5.46 billion in 2019. It is projected to reach 28.33 billion by 2027, growing at a rate of 22.3% between 2020 and 2027. Listen, some numbers say 23 billion, some numbers say it's going to hit 28 billion, but it's definitely it's looking like they're all kind of circling around, we'll just say 25 or so over the next 4 years. So that's a trend that you're going to start seeing more of. Some of the major players in this market are IBM Corporation, Walters, Kluwer, Deloitte, the London Stock Exchange, Infosoft Technologies, Acuity, NICE, Actimize, MetricStream, Actico, Chain Analysis. So interesting stuff. All right, let's move on. Next big trend, open banking. What is it? Essentially, it's the practice of securely sharing financial data between banks and third-party service providers. The banks basically leverage an API to open up their information. Huge in the UK in Europe, right? There was a EU PSD2 regulation. And it was the original intent was to introduce increased competition and innovation into the financial services sector. PSD2 forces banks to offer dedicated APIs for securely sharing customer financial data for account. So that's in the Europe. So it's big over there because of that regulation at PSD2. US are still early stages, but they say consumers may already be using open banking services without realizing it. If you use, Robinhood, Chime, they all use open banking software. It's not as quick, but we're going to see more of that. Hence why it's a trend. Okay, cool. Let's move on. So this was a cool, for our podcast viewers, you're not going to see our podcast listeners. You're not going to see these decks. You're just going to more so hear what I'm saying. But to our other viewers, it was a really interesting deck that an infographic that I saw. It basically says some trends around open banking, robotic process automation, API kits, cloud banking, banking as a service, distributed ledger technology. It's an interesting. They have open banking here, so it's an interesting infographic called out. And then they mentioned PSD2, the liberalization of banking as a banking business. Banks no longer have exclusive access to data and so forth. Let's move on. Next trend, embedded finance. So, I mean, we've been seeing cases of this, right? So embedded finance, right? It's when, non-traditional financial companies start offering financial services through their application or through their business, right? So we've seen Walmart do it, Facebook, right? It's a technology company, but they have WhatsApp Pay and so forth. We actually talked about this in one of our previous episodes, but it covers financial services such as banking, credit, investment, payment processing, lending, or insurance. So think of an e-commerce merchant provider providing insurance in a seamless, convenient way, easy to use customer journey. So that's really what embedded finance, that concept is basically, you're taking an ecosystem of various financial tools and you're putting it in non-traditional banking applications. Okay. Someone is trying to solicit me some graphic work. Okay, it's not the time for that, but interesting. Researchers estimate that the embedded payment industry will grow by 40.4% annually. And we definitely talked about this in one of our previous episodes. Moving on to the next trend. Digital banking, digital only banks. Yep, definitely seeing some of that. So it's basically a neobank. A digital bank is an online bank that doesn't have branches or physical representation. These banks usually receive banking licenses or work as a junior partner of an existing traditional bank. There are currently about 70 neobanks globally, 40 of which are located in the UK. Moreover, Sweden will become the first country to stop using cash by next year, 2023, and the rest are likely to follow this trend in the future. Thus, more and more new banks today are choosing a digital-only approach. The number of neobanks users will double from 2020 to 2024, according to the eMarketer report. Some of the popular neobanks include Revolut, Monzo, Statris, Pound 26, Atom Bank, and Clio. I was thinking even a step further. When you start talking about these digital neobanks, it's more. I'm looking at it as more. You're going to start seeing these banks, but they're going to be niche focused, right? So you could look at. We did a show on Greenwood Bank, and we did another show. It was on the same show. We talked about now a bank that kind of went under, digital bank, but they were focused on particular demographics. So I think you're going to start seeing more of that. In addition to what this trend is, more niche focused neo banks or digital banks. That's what I could, based on all the topics that we covered on this and just watching the market. That's what I think. It's not documented, but besides me saying it, but I think you're going to start seeing more niche focused neo banks. Next trend. And once again, just for those who just joined, we're talking about the trends. FinTech forecast top trends for 2023. DeFi and blockchain. Listen, right now we're going through a crypto winter. The market cap is down overall. We've seen a lot of fraudulent activities with FTX, with just things crashing. A lot of DeFi applications stopping withdrawals, filing bankruptcy. But I don't think it's going to end. They say that the market lost almost $2 trillion since its peak last year in 2021. The underlying blockchain technology continues to advance and show promise in a variety of applications. For instance, sending money abroad is now an expensive, cumbersome, and slow process. One of the primary issues that DeFi addresses is that it makes peer-to-peer transactions instant and free. We've seen a lot more activity in Africa. We start looking at different use cases. So, I think it's here to stay. We'll see what happens. So I definitely think it's an upward trend for 2023. The global one thing I read here. So they say the global cryptocurrency market cap today is $834 billion. It lost 65% over a year. They say that, and the market for Bitcoin is $320 billion, representing Bitcoin's dominance of the total market. But we shall see what happens. I know that's a hot topic when we talk about it. You have people on both sides of the fence that are equally passionate about their approach. But some VCs are still funding these things. Now, are we going to talk about things like NFTs? Who knows where that's going, right? Because we even talked about earlier, right? Autograph, they just laid on some people and so forth. That market's hitting. But overall, the technology itself, I think it's definitely promised for the future. All right, let's move on. Next trend, InsurTech. Never heard of it, so let's talk about it. InsurTech, it refers to the use of technology to improve the insurance industry, including the development of new insurance products, the delivery of insurance services, and the use of technology to streamline and automate insurance processes. Insurance industry is a very, manual process at times. So I could definitely see digital transformation happening there. They're calling it InsurTech. So that's definitely a trend we should look out for. Hold up. Let's just wait for some people that joined us on IG. Thanks for joining. Appreciate you guys. All right, let's look at some examples. Using telematics to track driving habits and offer personalized car insurance rates. Using AI to underwrite insurance policies and assess risk. Now, when you start, when you start doing those underwriting AI, that's what we talked about before. We have to start thinking about ethical AI, because depending on who programmed and designed the model, that could be some, you start wondering why. The potential there is you start wondering why a certain group of people, their insurance rates are always high based on, factors that it shouldn't be based on. So that's something to watch out for. But developing an on-demand insurance products that can be purchased and activated instantly through a mobile app, using predictive analytics to forecast and prevent insurance claims, using blockchain to streamline and automate claims processing. So different examples and use cases, but definitely a trend that we should look out for 2023. And on that note, that concludes our trends topic. So a couple of things, right? From a technologist perspective, I want to circle back. We like to talk from two perspectives. We like to talk from the technologist, and we like to talk from and give some advice to the business. From a technologist perspective, I think it's imperative to start learning about AI. No one's expecting you to be a AI expert, right? It takes a while, but taking a Udemy class or some online class, watching a YouTube video or two, and just start seeing, if you're in this technology ecosystem and anywhere of the cycle, how would AI impact my job? How would learning more about it? Like, for instance, from a cybersecurity perspective, and also looking at, and this is I'm talking about for me, for instance, looking at like securing the software development lifecycle, call that DevSecOps. I'm looking at ML ops. I want to learn more about it, learn, how do we apply this to, how do I apply it at least to the businesses that I help and so forth. So, but I think it's imperative, like, to understand it, like get high level at least on a minimum. I don't think it could be ignored anymore. The direction it's going. From the business standpoint, some advice, right? Look, same concept. Keep your finger on the pulse. You want to see how you can start some good advice that they said early on. But, how do we start streamlining processes? How do we start in terms of where AI is going? Right now it's siloed. How do we start building actual teams around that, like functional teams around that entire process? So, some quick takeaways from looking at this when we start looking at it, especially on the AI standpoint in terms of the trends. Want to just touch base on that. All right, that concludes the show for today. This will be the last show of the year. I just have to say a message right now. I appreciate everyone who stuck with us, who's been watching, whether you watch it live, whether you watch it on the rerun, the likes, the support. Thank you very much, man. This has been a project that was started during the pandemic, and just continue with it. So, and I'm happy to be doing it. It's so funny, like by doing this show so much every week and researching, the topics, especially because from what I do I've been in the financial services industry for like over 20 years. But this show's helped. This show, and by doing it, has helped me so much because I have to stay on top of this stuff so I can talk to you guys and also bringing interesting guests on and learning from them. So this is something I'm going to continue doing, and it's been so helpful. You don't realize how much you've absorbed until you start getting in conversations, and all of a sudden, all these topics start coming out because you covered it. So I just really, really appreciate everyone who's been watching us and supporting us throughout the year. This year we did our 100th episode, which is like a huge deal for us. We brought on a panel of past guests, some great topics we discussed. You can catch that on our website. Next year is going to be even more exciting for the Tech Behind FinTech. We're going to be adding more structure to our show, covering some interesting topics, bringing on some very interesting guests. And man, it's going to be an exciting run. We're here to stay, and we're going to continue moving on. So on that note, everyone, I'll be off next week. I'll be returning to the Tech Behind FinTech on January 6th. That'll be the next episode. And we will be covering, hold up, do I have that? Hold up, let me get that title before we take off. We have a title for the show. Let me see if I can find it that we're gonna go with. So we had, give me a second, I'm just trying to find it. Yes, the evolving landscape of cybersecurity, what to expect in 2023. I don't think my people on Instagram caught that. I had to pause the video to get the topic. So the evolving landscape of cybersecurity, what to expect in 2023. That's going to be the next episode of January 6th that we will be covering. Man. Also, it is Christmas weekend. Let's thanks for happy holidays from Jeff. Yeah, happy holidays to you too. So for everybody, and you celebrate Christmas, Merry Christmas. Whatever you celebrate, happy holidays to you. Also, Happy New Year. So we're going to be off for the New Year, and it's been a great year. Really happy to be here. Really happy to be doing it, live. So once again, we're off next week, and catch us January 6th on our return. the evolving threat landscape, what to expect in 2023, cybersecurity topic. So that's what we'll be covering on January 6th. On that note, everyone, have a marvelous weekend. It's a cold front right now in the US, but we'll get past it. And take care. Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.